Hey everyone, welcome to this explainer. Today, we are diving deep into the 2026 endocrine market to break down a massive pharmaceutical acquisition. We're going to reverse engineer exactly how hard clinical trial outcomes directly drive billion-dollar corporate valuations. So let's just jump right in.
All right, our story kicks off in July 2026 with an absolute bombshell market event. Vertex Pharmaceuticals announces they are acquiring Crentics Pharmaceuticals for a staggering $10 billion. And get this, it was an all-cash transaction. $10 billion in cash, that is a colossal number even for the biopharma space.
Because of this buyout at $85 a share, Crentics stock literally surged nearly 100% overnight. It skyrocketed from around $42 to over $84 in after-hours trading. Talk about an instant payday, right? This massively rewarded shareholders based on the proven intrinsic value of the company's pipeline.
But to really understand how they got this massive valuation premium, we need to hit rewind on the 2026 timeline. It wasn't just a sudden stroke of luck. From their successful commercial revenue in Q1 to dropping incredible Phase 2 data at Endo in May, and then culminating in the July acquisition, it was this relentless, continuous stream of clinical and commercial milestones that made a buyout practically inevitable.
Section 1. First commercialized new drug, Palsinify.
So, Palsinify really proved the commercial viability of Crentics' novel small molecule approach. It became the very first and only once-daily oral therapy approved by the FDA for adults dealing with acromegaly. Think about what a game-changer this is. Instead of patients enduring painful monthly injections, they could just take a daily pill to effectively control their IGF-1 levels. It was an absolute paradigm shift for patient care.
And you know, this clinical breakthrough translated immediately into financial performance. In just the first quarter of 2026 alone, Palsinify generated $10.3 million in net product revenue. That proved the drug wasn't just some cool laboratory success story, but a highly viable product, driving real, tangible commercial cash flow.
Section 2. Next-Gen Blockbuster. Adamalent.
Now, obviously, a $10 billion valuation requires way more than just one approved drug, right? You need a whole pipeline of blockbusters. Enter their next major asset, atumelnant. This is the very first investigational once-daily oral ACTH receptor antagonist, and it's designed specifically for congenital adrenal hyperplasia, or CAH, and Cushing's syndrome. It targets the exact underlying pathway in the adrenal gland that causes excess androgen production. That is addressing a massive unmet clinical need right there.
And boy, did the market react strongly to the Phase 2 data presented at Endo 2026. After just 12 weeks, key disease biomarkers like androstenedione dropped by up to 80%. 80%! That is profound clinical data, and for investors, it significantly de-risks the rest of the pipeline. This quote really hits the nail on the head. Data show investigational atumelnant drove sustained androgen reductions while enabling lowering of glucocorticoid supplementation to physiologically normal levels. By achieving these massive biomarker reductions without needing high doses of steroids, atumelnant pretty much established itself as a potential best-in-class therapy, and that drove Crentics' strategic value straight through the roof.
Section 3. Clinical breakthrough in rare pediatric diseases.
Beyond their adult treatments, Crentics' expansion into pediatric endocrinology was a huge catalyst for their valuation. Specifically, they were looking at an asset known as CRN04777. This drug targets congenital hyperinsulinism, which is a devastating, rare genetic condition. Basically, excess insulin produces life-threatening low blood sugar in infants right from birth. It burdens families with constant glucose monitoring and really inadequate treatment options.
The Phase 1 trials for this gave us a crystal-clear proof of concept. First, healthy volunteers were induced to produce excess insulin using a sulfonylurea challenge. Then, on day 10, oral CRN04777 was administered. And the result? That excess insulin secretion was rapidly and completely shut down in a dose-proportional manner, like flipping a switch.
The physiological efficacy here was just undeniable. In participants receiving the highest dose tested, 120 milligrams of CRN04777, the need for intravenous glucose support to maintain safe blood sugar was entirely eliminated for most subjects. Proving this profound level of internal biological control was a massive, massive confidence booster for investors.
Section 4. Corporate value driven by clinical achievements.
So let's zoom out for a second. How exactly do we mathematically bridge the gap between lowered hormone levels in clinical trials and a giant Wall Street buyout? Well, it comes down to this comprehensive, beautifully de-risked pipeline. From paltusotine being FDA approved for acromegaly and in phase 3 for carcinoid syndrome, to atumelnant in phase 2-3, CRN0477 in phase 1, and even preclinical assets. Crentics systematically targeted individual billion-dollar opportunities across the rare endocrine disease spectrum, all using a consistent oral non-peptide platform.
And that, right there, is exactly why Vertex was willing to pay a near 100% stock premium. They realized that integrating Crentics' repeatable endocrine drug engine collectively represents a projected $5 billion peak annual revenue opportunity. $5 billion! Vertex wasn't just buying a couple of drugs, they acquired a proven, repeatable drug discovery engine.
Ultimately, this whole story proves one thing. Hard clinical data is the absolute ultimate driver of corporate market value, period. But it does leave us with a pretty provocative question to chew on. How will this $10 billion mega deal reshape the entire global endocrine market moving forward? It's going to be fascinating to watch. Thanks for joining us for this explainer, and we'll see you next time.